Narendra Modi's third term. He's got a couple of coalition partners to consider now as well. Are you anticipating any change to policy or any cabinet announcements that might cause you to reconsider your investing ideas?
So I feel that the key change which Mr. Modi brought during his last 10 years was a continuous rein on reallocation of budgets and fiscal deficits. So from absolutely revenue-oriented expenses in budget, he increased the capital allocation in the budgets almost 3x in 10 years. And so while the entire private sector spending was not moving, it was the budget and government sector spending which kept India's growth momentum on. And I feel that now, since he's again forming the government, of course with coalition, but I've seen him throughout the ups and downs, including COVID, when he has never allowed this direction to be changed. So I feel the direction of the new NDA government also will be capital goods oriented, capital formation oriented, and development of infrastructure. I do concede that some of the core reforms, maybe labor-related reforms or agri-related reforms, even last time we as in India could not do. And this time also it will be very difficult. But what we do in terms of ordering, spending, and development of infra will keep the 6.5%, 7.5% GDP growth intact.
So has that caused you to reallocate your portfolio at all, or is it steady as she goes? Are you keeping the same settings that you had prior to the election?
So most of the portfolios had a very large allocation, I would say disproportionate allocation to public sector undertakings, and within that to defense, shipbuilding, a railway, a road. And I think that led to a lot of, you can say, over-allocation within the portfolios to this. So we feel that the direction will be same, but both due to over-allocation as well as very high multiples, there will be a time when there will be a time consolidation or time correction in these sectors. But if we take a medium-term view of 2 years plus, we continue to remain very positive of this. Where we have added weights is sector like telecom, sector like healthcare, and sector like higher spending with his hotels or some other sectors like EV. So these are the added sectors where we increased our weight a bit, but we feel that where the larger allocation is, which is into infra and capital goods and manufacturing, might undergo a little time correction.
Now, I know you're not keen to discuss the Reserve Bank of India meeting that's coming up later today, but in broader terms, in terms of the rate environment in India at the moment, how restrictive are you finding current conditions? And given elevated rates, you can get a pretty reasonable return on cash right now. What's your cash allocation?
Pre-election, we had kept our cash allocation to somewhere around 6%. And because we got a dip, we have reduced it back to about 2%. But I would say that from Reserve Bank perspective, because of a very large dividend which RBI gave to government, the entire fiscal outlook has become very steady. And because of which I think RBI will be able to follow the path which it needs to in terms of direction of rates and speed of rate cut.
We did see pretty volatile week for markets this week as the exit polls came out. Fair bit of selling midweek, but if we take a look at PE ratios in India, they're pretty richly priced, 23 times earnings. Did you feel like a correction was perhaps due for markets?
Yes, that we definitely feel that not from, I would say, Nifty perspective alone, but there was a lot of action and very high PE multiples in mid cap, small cap. And there I feel that the the correction will be actual in terms of price, and that will continue for quite some time in this year, because the last 1.5 years have seen mid cap, small cap rise substantially. And now they are at a premium to the large cap. So I feel that, yes, the premiums valuations are very rich in mid and small, but large cap, if you see on a very broader basis, in last 6 years, there is a 15 to 16% growth in Nifty, and same is the earnings growth. So we have not re-rated ourselves substantially.